Since its inception in 2009, Bitcoin has provided a stunning 27,000% return. However, like with any investment, the return was not linear. Bitcoin has had multiple peaks and valleys along the road, and the coin's trading price in 2021 was a roller coaster ride. There are some short-term headwinds dragging on its performance, but there are grounds to assume that we haven't seen the final high for this popular cryptocurrency. Bitcoin is down 4 to 5% from its all-time high of $68,789 set in November. Several variables, including increasing interest rates, a decline in desire for high-risk assets, and geopolitical concerns, are all contributing to the poor performance. Bitcoin's recent performance in reaction to these concerns calls into doubt its role as digital gold or a hedge against rapid inflation. Unlike the US dollar, Bitcoin has a fixed supply, which should sustain a growing value as demand grows over time. Bitcoin's supply is now about 18.9. However, it is limited to 21 million coins. In principle, this should make Bitcoin a decent inflation hedge, but this hasn't happened. Bitcoin's recent performance is inversely related to the rise in long-term Treasury bond rates, with yields rising during periods of inflation. The price of Bitcoin has fallen in recent months as the 10-year U.S. Treasury yield has risen, indicating a negative association between the two. As a result, Bitcoin has a high association with stock market performance. When there is a bull market, Bitcoin tends to outperform stocks. However, when market downturns, Bitcoin underperforms. Bitcoin has a place in a well-diversified investment portfolio, but its trading history demonstrates that it is highly associated with market sentiment for high-risk, high-growth assets. Cryptocurrencies are a dangerous investment, but one reason might propel Bitcoin higher in the long run. Bitcoin's fixed supply acts as a long-term driver for price increases. Consider that the market value of Bitcoin is over $700 billion at the time of writing, while the entire amount of gold owned by investors is believed to be $2.6 trillion. Goldman Sachs predicts that as time passes, more of the money in gold will be transferred to Bitcoin. Because the currency has a finite quantity, a reallocation of those assets might cause Bitcoin's price to rise. It's all about supply and demand. Other data also indicate to an increase in Bitcoin interest. It's the most commonly recognized cryptocurrency at merchants globally, and affluent individuals, including sports stars and billionaire investors, are beginning to dedicate a percentage of their net worth to cryptocurrency, implying that Bitcoin is here to stay. Furthermore, the Boston Consulting Group predicted that global wealth will reach $431 trillion in 2020. It would only take a tiny movement in that amount of wealth in favor of Bitcoin to cause its price to rise over time. So, absolutely, Bitcoin has the potential to hit $100,000. But given its trading history, that is unlikely to happen until inflationary pressures lessen.